after what the Bank of International Settlements did to the BRICS at the 12th hour, pulling out of Enbridge after it was fully operational. The Bank of International Settlements and their innovation hub had been behind the development of Enbridge, along with China, Hong Kong, Thailand, and United Arab Emirates for 4 years. And at the 12th hour, as the meeting in Kazan was taking place, you have Gustas Carstens, the head of the BIS, guy who's on his way out in June, said, well, we can't really be part of any program that is in association with countries that are being sanctioned by the West. It's as if he just realized that Russia was the R in BRICS. And I think you will see, to Trump's point, far less transparency in what the BRICS are doing. They just welcomed in Indonesia into the fold as a full member, the largest nickel deposit in the world. We saw just this weekend Iran, Russia, and China doing joint naval exercises, but they will not be as open as they have been in the past, I think, because they see what the West plan is. And when you talk about tariffs, 150%, those aren't tariffs, those are sanctions masquerading as tariffs. The BRICS, for quite some time, have not really tried to create a common currency, but rather a common settlement currency, which is very different. The whole plan was to trade in local currencies and then settle in gold, but they came up with a common settlement currency called the unit. And Dilma Rousseff, the former president of Brazil, the head of the New Development Bank, BRICS New Development Bank, did say this, that in principle they've agreed to a new settlement currency called the unit, 40% gold-backed, deliverable by two central banks upon demand, 60% local currency. So I think it's the wrong move. I think it will only accelerate the BRICS, and I think it will only make them keep their cards closer to the vest. Look, no one wants to mess with Donald Trump or the West in terms of retaliatory measures like sanctions, like tariffs masquerading as sanctions and being cut off from the U.S. market. But at the same time, I think they will continue. And I think this exemplifies why these countries have sort of, I think, found safety in numbers, if you will, because of the Western hegemony and this type of behavior where, look, we're a country that is literally insolvent. We talk about the 36 trillion in debt. Well, what about the 175 trillion in unfunded liability? We're a country that owes 28 trillion in treasuries that are coming due by 2028. We'll only take in 15 trillion in tax revenue. Where does all that come from, if not for countries continuing to want to hold our U.S. treasuries, which have been pretty poorly performing over the last year or two, especially as rates move higher? I think it's the wrong move, honestly, and I think it will have a negative reverberations over the next 4 years. I guess we'll have to see. Xi Jinping and Putin and OPEC, and how could they do this? Saudi Arabia, how could they do this to us? Certainly, incentivizing this villainous act would be one way to do it. Look, I mean, I think Trump understands that a reset is in order, and you can fall on the sword, you can inflate, you can default, or you can find a villain. And, this just, in my mind, accelerates de-dollarization, but done so in a much more covert manner. And we've seen that. We've seen the acceleration of accumulation of gold and other commodities. But net since 2014, the central banks of the world have been sellers of U.S. treasuries. That hasn't stopped. And they've been replacing it with things like gold, because gold has doubled the performance of the 10-year treasury with no counterparty risk, with no sanction risk. Look at last year. Gold was up 40%. Treasuries were up 4.5%. And you have inflation, you have default risk, you have sanction risk. And why would any of these countries, why would a country like Saudi Arabia want to pull oil out of the ground with sweat and effort and labor and sell it to us for dollars when we can, with a keystroke during the pandemic, create 9 trillion of them? And why would they want to reinvest any of their excess into treasuries when we can, with a keystroke, create all of those dollars and then buy treasuries with it? It's a rigged game, and I think the rest of the world understands that. And that's why when you look at Judy Shelton, and she is advocating for 50-year treasuries redeemable in gold. Maybe she understands that the treasury market is something that has lost, I think, appeal to much of the world. And
Right.
It's no longer about trust us, this will be just fine, and more along the lines of we need to see something behind it, standing behind it, rather than just your ability with a keystroke, which many would argue is immoral. I mean, there was no effort taken to create that wealth, but to be able to touch a keyboard. I think there's a lot of countries around the world who are reevaluating the value found in U.S. Treasuries. They're not what they once used to be. And at the current rates we're at right now, roughly 4%, he doesn't want to refinance at 4%. So they want to bring down rates. And the way they do that is to bring down the dollar, bring down the stock market so that the Fed comes in and lowers rates. And to scare people into leaving equities into buying treasuries, which will lower rates, allow the refinancing of this to be much easier, a weaker dollar. These are all things that you would want. And maybe it's a form of incentivizing. And then you bring back your manufacturing. And I think there is no other way to get to the other side than to deal with this edifice of debt that we've built based upon suppression of interest rates for 2 decades that have created huge distortions in asset prices, misallocations in resources and capital. And there is no way around it without having to pay that price, whether it be by default, hyperinflation, or finding a villain, or revaluing gold. Head of the Dutch National Bank, the members of the Bundesbank are all calling for gold to be revalued. After all, it's held in the gold revaluation account. That is one angle as well. And with what's happening on COMEX and the LBMA, that could be a possibility. But yes, I look at the moves that are being made, both in Europe and globally, and it is as if he is incentivizing this type of controlled demolition, a reset. And what better person to do it than the person who supposedly understands bankruptcy and reorganization better than anyone? I think it would be universally agreed upon that we are at such a point. When you understand 1 trillion seconds ago was 31,688 years ago, and we've been accumulating debt at the tune of $100,000 a second, or $1 trillion every 100 days, which took 200 years to do the first time. We are so far indebted, so far past that Rubicon, that it will take things that are shock and awe. It will take very drastic measures to address this, and maybe this is the first step in that journey. Every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear. And it's not so far outlandish to think that it could happen. Over my shoulder, you have Roosevelt there. His first act in office in April of 33 was to confiscate gold. That's pretty good. You know, we're making a lot of money on this deal, but then he devalued the dollar immediately by 40%, revaluing gold by 40%. When Nixon closed the gold window in 1971, he then revalued at $35 an ounce, which is, by the way, what it is on every Western central bank balance sheet to this day, except in the United States, it's 42.22, because in 72, he revalued gold from 35 to 38, and then in 73 from 38 to 42.22, and the market has done the rest to revalue it to where it is now. It's held in the gold revaluation account. That's the name of it. You can't make it up on every central bank balance sheet. And as I was saying, the head of the Dutch National Bank for 2 years has been saying we need to revalue gold, at least market to market, to offset our liabilities, as have members of the Bundesbank, as has Cynthia Loomis in a effort to fund the strategic Bitcoin account. And then you got guys like James Rickards, who says, look, $24,000 an ounce gold. And he comes to that by using a 40% gold backing and M1 numbers, dividing it into the number of ounces of gold that we supposedly hold at Fort Knox and the Fed and the Denver and New York Mint. And he comes up with $24,000 an ounce, which would add $6 trillion free and clear to the Treasury General account, which would be able to start to work down our debt and inspire confidence. And to Judy's point, start backing treasuries redeemable in gold and 50-year treasuries with a very, very low, if not a zero coupon. These are the kind of moves that you would have to make in an effort to do this. Now, I'm just going to go out on a limb, and I'm not saying that this will happen at all, but you want to talk craziness, revalue gold to $142,000 an ounce, and the debt is offset immediately with your assets. Liabilities but that doesn't take into account the unfunded liabilities of Medicare,
right,
Medicaid, Social Security, but the balance sheet. Could it be done? Sure. The U.S. Treasury says we'll pay $142,000 for everyone that wants to sell their gold, every country that would like to deliver it to the U.S. Treasury. Is it pie in the sky? Sure. Could it happen? Why not? With Bitcoin at 100,000, why couldn't gold? All the central banks have been accumulating it hand over fist. And when you see what is happening right now on the LBMA, which is in essence in default, in my opinion, and the amount of gold that has been shifted, over 20 million ounces since November of last year, have come into the United States. We've become a net importer of gold. Largest deliveries we've ever seen in the history of the COMEX coming to the gold ever in the February contract, almost 6 million ounces. JP Morgan delivering 4 billion of gold into COMEX for a customer. Who's got 4 billion? Who is that customer?
Right.
Is it the Fed? Is it the Treasury? Is it Warren Buffett? Who knows? Point is that crazy things are happening that no one's ever seen in my 35-year career as it pertains to gold, the importation of it, the reshoring of it. I'll say this, I don't know what they have in store for gold, but it seems very American-centric, and it's so far of an outlier, Paul, in anything I've ever seen, I can't even begin to explain.